David, great to have you. Let's just get to the numbers themselves and start off there. Given your long history tracking them, you say you've never seen anything like it. What are they, and how is it happening?
Oh, thanks for having me on, David. I think I said this when I was on with you in September and again in December. I'm shocked because when you sort of summarize and tally up all the numbers, and now we're at the end of the first quarter, the numbers are so big that I actually thought we made a mistake in actually adding the numbers up. You almost have to go through every retailer to make sure that it wasn't a mistake. The total sales growth in the United States for, according to our models, we've been doing this now for 20 years, for the quarter, were up almost 23%. I mean, almost 23%, and that's like all of them together. That includes Samsung, Apple, and Amazon, and of course we gross up the Amazon for their numbers. But what's just as amazing actually is not just those numbers, including SAA, which is Samsung, Apple, and Amazon. But what's amazing is that traditional sales, stores, Walmarts of the world, and Targets, all retail in the US, that number actually is up 16%, which is a staggering number, staggering.
Yeah, I mean, those numbers are amazing. We had them up, David. I don't know if you can see them or not because I'm not sure you have a monitor there. Can they continue, I guess, is the question many investors will have at this point, given the move in the stocks that has occurred already in retail. And you always teach us about inventories as well and how important that is. So I guess two questions. One, do you think it will continue? And two, how do inventories figure in here? Are they starting to grow?
Well, I think that inventories are actually totally key to this entire story, and we'll get to that. I don't want to forget about that. But to talk about the earnings that have just come out, with the total sales growth that I just mentioned to you, it's important to recognize that that's against easy comparisons to last year when we started with the pandemic in Q1, right? So when we compare those numbers that I just gave you, 23% and 16% of traditional retail, the 16% is against a zero last year. But the 23 is against a 3.5% last year. So, but even on a 2-year basis, when you do a 2-year average, the total average sales for all of retail is up 13% on a 2-year average basis. Just to put in perspective, right, that compares, David, to about 4 to 7% range. You got 13% versus the prior 5 years of 4 to 7. Traditional retail, if you get the average, 16% this quarter, but if you do the 2-year average, you're looking at 8%. That compares to 3% the last 4 or 5 years. So you're looking at...
It's a real pickup, yeah. It's an overall pickup.
Massive pickup, but it's actually been picking up the last 3 quarters. It's not just this quarter. Now, you asked me, viewers want to know if it's going to go on or not. Here's the thing. The retailers have reported numbers that have been staggering. I sent your office a list of numbers. I'm not sure if they have them to put them on, but you've got companies like Dillard's, for example. There was one of the first retailers to report this quarter. They earned about $7 a share. They were expected to earn $1. It's hard to believe. $7 expected to earn $1. When you look at other companies like Home Depot, they almost earned $4 a share. They were expected to earn, but $3 is what they were expected to earn. Dick's Sporting Goods almost earned $4, but they were expecting to earn $1. Even Macy's earned about 40 cents. They were expecting to lose 40 cents.
Shepard Smith here. Thanks for watching CNBC on YouTube.